So let's start. Let's start with this tool over here. Just turn that off. So I call this Spy Watcher. Um, we don't really have a good name, but if you have a good name, let me know. So there's a few things here. So we have audio alerts that you can turn on, and then if something important happens, it will tell you that, and it will give you a description down here. So you can hear that we have an active audio alert right now, and I can confirm the alert, and then it will be quiet so that it doesn't bother me. So if I'm so now we got another alert coming in, so we have a completely different sound, so you can learn the different kinds of sounds, and then you can confirm them as well. So the idea is that you can be at work, you can be doing something else, and then when something important happens, it will get your attention, so you can look at it. We can also click on this button, percentage gain. This will tell us over the last 15 minutes who's making money. And we can see that when I look at the SPX contracts, 0 DTE, for these strike prices, that right now the calls are making money. I mean barely. So it's not really making them a lot of money. We want to see them having a nice belly for a healthy trend. But right now you can see that calls are slightly making money, but it's really just a sideways market until we have a nice belly forming and it persists. You can also change this to say, show me who's making money since open. You can say the last 15 minutes, the last 5 minutes, or if something happens, you can lock it in and say track event. So then we'll track the price changes on the contracts from when you click that button. So that is, pals talking, you want to see what happens, you're going to click on that. Then we also have a link here to unusual whales. Let me just close that thing. So with unusual whales, that's just something that Sadie created that will track the best performing contracts on SPY or SPX for today. So that can help you with that as well. I'm going to close that out. Down here we have a list. So we have VIX and ES. These are the primary ones we're looking at. So if you have a blue arrow, blue triangle on VIX, 2 minutes and 1 minute, you'll see it here. If it's a hollow triangle like this one in ES, it tells me that on a 2 minute I have a yellow triangle, but on the 1 minute I don't, which means that on the 1 minute I have a blue triangle. We also had an older way of doing calls and put signals. Short would be a put signal, a long would be a call signal. So I'm indicating those on here as well. I removed them from the indicator because they're not as good as the triangles, but when they align, obviously that's an extra signal. So we also have all of the industry sectors on here. We have JPM indicating the, let me just turn the audio alerts off, DXY when the dollar runs. So obviously those things will help you to see what's happening in the market. Now, I try to interpret as much of what's happening, right now. So these signals are in real time. You can always look at the active alerts, and you can see that VIX or ES at the 48. And if you look at the charts, you'll see it's ES. So that means choppy price action. So we don't. Our strategy says we're not going to take any trades. And then also VIX and ES on the same side of the 48. And I'll show you guys the EMA clouds here in a second, just so you know what you're looking at. Now let's look at this. So we have super trend, bullish and bearish, bullish green, bearish red. It's been, it's active on the 30-minute chart for VIX. So obviously it's been bearish for 30 minutes. And then we also have other ways of calculating the strength. So, if you use the sentiment colors, it will use a shade of red for bearish and a shade of green. This is telling me that we have the maximum shade of bearishness on VIX. We're also below, VIX is also below the previous day close. And ES, so when the background is red, it tells me that we are below the 48 cloud. If it's green, we're above the 48 cloud. If it's purple, we're at it. So we're not necessarily right inside of it, but we're at it. So now ES changed from purple to green, so that means now we're above it. So we don't want to trade if the color is the same on both of them. The red line below it, that tells me that VIX is also below the pre-market low. The green line on JPM here tells me that JPM is above the pre-market high. Okay, and also previous day's high. And then so it gives you all of these indicators. Sounds good. So those are some of the details you can look at here. So it tells you quite a lot of what's going on, and it helps you to interpret some of what's happening. And over time, this tool will get better. So that's a simple link, m2.gatherworks.com, and then click on SPX, and you'll have that. So let's take a look at the charts. So now the question is, what is the 48 cloud? So if you look at this blue cloud that looks like a horizontal line, that's the 3448 EMA cloud. So the one line is the 34 EMA on the 10 minutes, and the other one is the 48 EMA on the 10 minutes. And when it moves sideways like this, it's also another no trade, because we have sideways price action. If the 48 is below the 34, it's blue. If it's the other way around, it's orange. So this is the same thing on VIX. So you have the 34 and the 48 forming a cloud. Now, if we go back in time, let me just show you how those change. So that's the same thing going back in time, where it's thicker, where it has a slope that makes it much better to play. So that this is on Friday. And what we're looking at as part of our strategy, I'm just going to turn off the Mancini levels. So the idea is, what we're looking for is we're looking for this bounce off the 48. Okay, so you can see this 48 cloud. Okay, when we see this bounce off it, now we want to play it. So if we're above it, the bias is bullish. If we're below it, the bias is bearish. And obviously, we want ES and VIX to have opposite side of the cloud, so the opposite bias. So when we see this strong rejection on Friday at 8:28 a.m., this tells us that this is a bullish day. We can see that it keeps moving away. Then this green cloud there, that is the 512 EMA cloud. And all of this is based on the Ripster EMA cloud. So, he's got a lot of documentation on that as well. So we're leveraging all of that experience from him that he's been training forever. But obviously want to give him credit as well. Then you look at SPY, and these charts are lined up. So you see the vertical line, it's happening at the same time. So when we have both of them rejecting the 48, ES to the upside and VIX to the downside, that's telling us that this is a strong play. Okay, and we'll talk about the danger zone here in a second. So we have on the top, we have ES, at the bottom we have VIX. On the left we have 2 minutes chart, and then on the right we have 1 minute chart. So this is the primary play. So when we have a yellow triangle on ES, that means we're long, or calls. And then when it agrees, then blue on the VIX. Now you'll see that we stay in yellow until we get up there on the 2 minute. But you'll notice, so right here, you can see the lines on the right hand side, you see it go up, and then here On the 1 minute ES, we get a blue triangle. We don't have a blue triangle on the 2 minute, which means that now the 1 minute and 2 minutes is out of sync. So when they go back into sync with this yellow triangle, that's usually a good re-entry. So if you missed the move and you want to get in, or if you want to add to your position, that's usually a good time for you to do that. Okay, so you can see here's my re-entry. And the same thing with VIX. So we have the blue here. Then we get a yellow here, and they're not as out of sync. But you can see that here on the ES we had a much better re-entry signal. But I would use 1 minute ES and VIX getting back into sync as re-entry signals, and they usually work pretty well. So when we get here to the top, you'll see that the danger zone. Let's talk about the danger zone. Okay, so the danger zone, is this purple cloud. Okay, and it's based on the 8 EMA. So the one side of it is the 5-minute chart, 8 EMA, and then the other side of it is, so the tighter one is 2 minutes if you're on the 2-minute chart, and 1 minute if you're on the 1-minute chart. So it will be whatever chart you're on. So you have to be on either the 1 or 2-minute chart to see this. So on this one, the top of the danger zone will be the 8 EMA on 1 minute, and then at the bottom 5-minute 8 EMA, and then on the 1-minute chart at the top it would be the 1 minute EMA and 8 EMA and the 5-minute. So this gives you a very good profit taking. So as long as you stay, so for calls, as long as you stay above it, you're gonna be most likely you're gonna be pretty safe. Okay, if you start breaking into it, then you can consider taking profit. Now obviously if you're deep in the money, then you can lock in some of the profits and then keep your runners. But when it has a yellow outline, that helps you to know that we have a strong move as well. So when the outline goes away, then it's losing some of that momentum. And then to the downside, if it's moving down, then a blue outline shows you that there's strong momentum. Okay, and again, if it goes away, then you're losing some of that momentum, and then when it comes back. So that's how you read that. Now if on the 10-minute, if we don't have a trend, then the purple will turn into a blue. So you'll notice that, so when it turns blue like this, it tells me that on the 10-minute we don't have a trend. Okay. So that was Friday. Let's jump back to today just so we can see what's going on here. Obviously, we're at the 48, so our strategy says no trade. That's exactly why we're in a training session during the day. Let's talk about this thing on the bottom right. So these are my higher time frames. So we're on the ES chart. So in the 1 minute, the EMA clouds, according to and this is based on the red and green. So it's this other EMA cloud. So it's a short term, the 512 EMA cloud. We're red on the 3 minutes. We're neutral, 5 minutes neutral, 10 minutes, 50 minutes, 30 minutes. So we're neutral on those. And then above it, it says that the super trend has been active on the 1 minute chart for 4 minutes. The bullish super trend has been active for 54 minutes on the 10-minute chart. So this will help you to look at the higher time frames, so you could quickly do that. And then we have the percentage gain. So if you hover over it, this is a percentage gain since previous day's close, which is the standard way that they look at it. But this is the percentage gain since open, and that's a very important thing, because when people when you have a gap up or gap down, that open becomes more important, because now if I'm buying at the open and suddenly I'm below it, then obviously I see red in my portfolio, so that gives me more incentive to then get out of the trade. And then we have a score, that this is our buy score. If it's negative, then it's more of a sell score. So we look at a bunch of different things to decide whether we're more likely to go up or down. Obviously, when we're closer to 0, it's more neutral. When it goes up to 10, it will make more of a difference. And then the one at the top, that tells me on the 30 minutes, based on some math, are we looking to move up or down based on the buying action that we see there. So, a bunch of...
Can I ask something? Last time in one of the videos, you said that we don't want to go against the bias. So let's say 1, 3, 5, and 10 are red, and 15 and 30 are green. So how do you determine what's the bias?
Absolutely. Good question. Now, I'm just going to jump back to Friday, because today it's a sideways day, so it's going to be hard to give you a good explanation based on what we're seeing today. So if we look at Friday, so the bias is simply, we look at this 48 cloud here. Okay. So this bias up here is bullish. Okay. So that's all we're looking at. Now these super trends and different levels, let's ignore them for right now, because I'll get back to them here in a second. But what we're saying is that if the bias is bullish, okay, we have this nice rejection. You see, if we didn't have this nice rejection, like we have today, it's a sideways action, because we don't have that nice bounce off the 48. But this gives me a nice slope up. You can see that this 3448 cloud is expanding. It's getting bigger as it moves up. So those are all healthy signs. So you could clearly see that this is in a bullish trend based on the clouds that we use. So when we get in here, we see a yellow triangle on ES, a blue on VIX. Then we're saying we want to buy, we want to get into calls. And we also want to stay in calls as long as we're above the danger zone, the purple thing, and it has a yellow outline. And the dots, that's the trend dots. So also the trend dots, stay in, at least in the middle to upper part of it. That makes it even healthier. When we start breaking into it, we can lock in some of the profits and keep runners as long as we have an outline. But then we get up here and we get a signal against the trend. So now we get a blue triangle, which on ES would mean, get into puts. So the idea is, we're still bullish, and trading against the trend is very risky and unforgiving, because if you're wrong, you're going to get burned more. Where if you get into calls and you're with the trend, even when you're wrong, you get in here and then it drops. Like, if you get in here and you drop on a red candle, it's probably going to fix itself. So it's more forgiving because you're trading with the trend. Where if you're trading against the trend, you get into this and then it bounces, it's more unforgiving. Now, obviously, you would have made money here, even if you traded against the trend. But the problem is, while you're in this call, you're not getting ready for the next upside. Okay, and if you look at this, okay, so this is the VWAP, this white line, and you'll see that the VWAP, I dull it out a little bit when I have sideways compression action, but and then we have for the Keltner channels, we have the upper band and the lower band, and these are really based on ATR, based on your expected move. So if you start trading outside of this upper band, it's a strong move. So you could see here that I changed the color on the upper band to green when there's a strong super trend move. And if I change the lower band to red, then I have bearish super trend, and then I have 1.5 move of the Keltner channel up there is an extended move. So usually when you get that extended move, uh, the first time you're gonna reject. But if you hit it and you keep going, that's usually a sign of a very strong move. So you can see here, we start the day, we get outside of that extended channel, we stay there, we stay outside of this upper band. So all of this, these are all more indication of a strong move up. And then I lose my yellow on my danger zone, so that's immediately a signal to lock in profits, or maybe even lock in everything, partial profits or everything. That's up to you. But then,
and for the entries, are you only using for the re-entries the 1 minute, or also for the first entry?
I mean, so I don't use the 1 minute for the first entry, but I want the 1 minute and the 2 minute to be an agreement. So they both should be an agreement to get in. And then if I get into, let's say I get in over here, obviously this is pre-market, it's shaded, but so if you look at this candle over here, even though it's green, it wasn't green for the entire 2 minutes. So you want to make sure that your candle pulls back if you're going to get cold, so that you can buy, on that red candle. Because if it's green, then obviously you're overpaying. You never get in on a big candle because you never know if you can trust it, but you're also overpaying for it. Big candles are for profit taking. So if you get into a move and then you get a big candle, you want to lock in a lot of your profits. And if it's a big candle like this one, sometimes it's worth it to just lock everything in, because even if it keeps going up, it's going to take a while before you get that same profit again. So for the go ahead.
Sorry, for example, when you have the yellow triangle to buy, and the candle is big, so you're not taking it. Like this one here, the first one here.
Like this one?
Yeah.
Well, I mean, so this is before market, so the only way you could do that is, like if you trade futures, or, you place, but no, you're not going to do that with options unless you're, on interactive brokers. They let you do, SPX before market open. But so if
let's say this happens during the daytime, during the regular trading hours. So are you going in when the candle closes? Are you always waiting till the full candle is complete?
I mean, that's a good question, and I don't have a good answer for you, because it really depends on so many different things. Getting the best entry is really tough, and I cannot give you a good answer on how to do that. What I can tell you is the indicator will tell you what direction not to play. So this is not puts. What's the best entry? I can tell you that when it's a big candle like this, I'm definitely not getting in, because with options you're totally gonna overpay. Okay. And I don't know if I could trust a big candle like this, because it could go like this and immediately return back again. So I'm definitely never gonna get in on a big candle. I'll take profits on it. But then when I have this big candle and it looks like even here, you're not really sure. Like the best entry here, honestly, would be around here, where you could see some red candles, where you could see that. Because I mean, when you have a big candle like that, it's so easy for it to reverse. So if I look at this in retrospect, the best entry would be around here, where I have some pullback, where I like retest this level a little bit. And this is not the specific level, so it's not a strong level, but just the fact that we have a little bit of a pullback and then we resume upwards, that's a good one. Now, if that one in retrospect, I can tell you, but this one, if you're not in retrospect, this would be a good entry right here, because I missed the initial move, for obvious reasons, because it was just too strong. um, I lose the yellow outlines, so I have some pullback here, but then I get the yellow outline again, back again. So this, you see, because this shows me that it's a real move. When I have such a strong move, I cannot trust it. Okay, so for me, this was the best entry in the moment, because I had some pullback. It proved to me that it's a real move. And, I bet if you go look at higher time frames, which is a better way to do it, um, you can, like, if you go to a 5-minute candle or 10-minute candle, those help you as well to feel better that it is a safer move. But you want, the safer moves really require you to wait a little bit to see if you can trust that candle. It pulls back a little bit, and I resume up. So that's what I mean with the retest. So we have a move, it comes back, it shows me that it's a real move, and it keeps moving up. So this is the safer entry, just based on how things move. And then I stay above it. When I get this bounce here off the danger zone, you can add. You have a little bit of sideways consolidation, so you could add more. But then as soon as you lose that yellow outline, that's where you want to lock in most of your profits. And then I also tagged at different times, because part of our strategy says that around 10 a.m. it's very common to see a trend reversal. So at 10 a.m. I have a vertical line, 10:30 and 11, and then at 2 o'clock I have another one, just as a reminder that these are important time frames where things could change. And then if I go in here, so then I get another yellow triangle, but you can see that this is not purple anymore. This is blue, because I don't have a trend on the 10 minutes. So this danger zone will change to blue if I don't have a trend on the 10 minutes. So once I have the trend on 10 minutes, whether up or down, this will become purple again. So you can see this downward move. You see that it's outlined, so it's a nice move, but you're playing counter trend. You get here, you get a yellow triangle, you get yellow outline, but it's still not purple. So this tells me that this is still not a good place to get back in again. Then, obviously I'm still in a yellow triangle. This comes back, and now I have purple again. So this, combined with the blue triangle here on the VIX 2 minutes, makes this a very good entry if you missed the original move, to get back in and ride it to the upside. Okay, so you can see here on the 2 minute we have a blue triangle. You can see on the 1 minute, see, look how beautiful this is. So again, a lot of our strategy is based on the 3448 EMA cloud. And so you can see VIX coming up, rejecting the 48, coming down, trying again, rejecting again, and that second rejection making it stronger. So you can see that this, when it, on the 2 minute, when you get this blue triangle, it's, there you go, you're moving up. On the 1 minute, you had an early try, it failed, try it again. And then you got this blue triangle in 1 minute, and then the 2 minute came in, and then it was just upside all the way until again you lost the yellow outline. So that's So that's how you look at it. It's like when all four triangles align, it's usually a good entry. But again, I want to see this move away from the 48 because like here we have a move from the 48, but we're still very close to it. We try it again, and now we go down there. So that makes it a stronger move. We're touching the bottom band. If we stay outside the bottom band, it's a much stronger move. So then I add flames to it. If we stay above the top band, I put flames to it. But again, you get back to the 48, no trade, because this is a dangerous spot because anything can happen. It can break through it. Most of the time, in my experience, when you get to the 48, you always, when you come from the bottom, you reject. When you come from the top, you bounce. I mean, so chances are, and I'm making this up, 80% that when you get to the 48, you're going to stay on the same side as the 48. I don't have good real numbers, but if you just look at it, you'll see we VIX, boom, boom, we stay below it, boom, boom. Now we're with it. You can see on ES, on Friday, we bounce off it, we come back, So, so the bias usually for me is that, we're gonna stay on the same side of it, but we don't want to trade around it because anything could happen. And then if I'm in a yellow triangle, and I get a push, counter trend push, I'll put in a red triangle to give you that heads up warning. If you're in a blue triangle and you get a big push in the opposite direction, I'll put in a green triangle. And that's just to tell you, it's like a warning shot. It's like an early warning that, I'm getting a big push in the opposite direction. Sometimes nothing happens. Like here, we have a blue triangle. I get green triangle saying, hey, here's a big push in the opposite direction, but it keeps going. So that's obviously a very strong move. But, sometimes when you get those, it could start turning. So when you see those, sometimes it's a good idea to lock in some of your profits as well. Now, so getting back to Andre's question, like what if we're at the higher time frames, we're bullish or bearish, we're the opposite of what we are at the lower time frames. Obviously that just simply means that there's more noise. It's not necessarily an A plus setup. Like if on the hourly or the 4 hour or the daily or the weekly or the monthly, if everything is in an uptrend, but in the short term we're in a downtrend, it makes it, it's not an A plus setup. It's but today we might go the opposite direction. So the higher time frames is just a good reminder to show you what's happening at the higher time frames. But usually we trade based on the interaction with the 48. If we see a strong move, we want to make sure VIX and ES do not move in the same direction. We want to make sure that they're on opposite sides of their 48s. And then, no trade when we're approaching it or we're at it. Whether it's ES or VIX, the same thing goes, because anything could happen. And, you could trade anything you want, but those are just more choppy situations. So if you're going to trade them, make sure that, you take profits sooner and maybe lock in profits instead of keeping a runner. Did that help, Andre?
Yeah, maybe one word on the stop losses. So how do you set the stop losses?
So the stop losses. So when I get into a trade, I usually put in a stop loss is like a catastrophic stop loss. So if I get into calls or puts, it might be I immediately put in like a 30% or 50%, well, depending on a lot of things. But I put in a stop loss in case it immediately turns and I'm immediately wrong. Now, on these choppy days, you cannot make it too tight because it'll stop you out, and then it will
Yeah.
keep going, and even when you're right. But it's good to have something catastrophic so that you don't hold on to losers when you
Mm.
get there. But when it comes to, if my trade goes green, I want to move up my stop loss to break even so that it cannot go red anymore. So don't let a green trade go red. If you buy,
Mm.
let's say you buy two contracts and now up your 10%, then and you want to hold the runner, what you do is you're going to sell one of them for 10%, and then you can take the other one and move it to minus 10% or minus 9%. So now you have a runner with lots of space, and even if something goes wrong, you're going to scratch. You're not going to lose money. Obviously, if there's a big move, it could still,
Mm.
your stop loss say, okay, when it triggers, give me a market order. And when there's a huge jump, obviously you could still lose money. But, I mean, the idea is that when you have a stop loss there, that you're going to get sell pretty close to it, even though it's not guaranteed. And again, stop losses don't work, you know, pre-market or post-market either, as I'm sure you guys know. But yeah, so that's one thing you could do. But in terms of where do I get in and out? I mean, it really becomes a technical trade when I bounced off the 48. I'm in it. If I stay above the danger zone with yellow outline, I'm gonna stay with my trade until when it touches it, I could say, okay, I'm gonna lock in most of my profits, or some of it. When I get to the trend dots, I might say, okay, I'm gonna take more of my profit. When I get to the bottom of the purple band, I'm gonna take more of my profits. Um, you know, but as long as I hold, so this 512 EMA cloud, as long as I hold that, the move is still on. Um, so I start breaking into it. I mean, honestly, depending on how aggressive you are and how risk tolerant you are, I mean, the move is still on while we're riding this 512 EMA cloud. And, again, Ripster has a lot of training on how he uses the EMA clouds. But even this, we're bouncing. Like, this was a good re-entry as well. This bounce off the VWAP. I mean, obviously we didn't touch the VWAP, but this was a good entry. This failed breakdown. This was a good entry. Like, there was a failed breakout up there. But, again, I'm not going to play the downside because it's counter trend. So when I get a failed breakdown, both of these were good entries playing long side. But you can see that we're holding the 512 EMA cloud. So that's very bullish. We get there. Obviously, here we start losing it. But we still go up. I mean, we're still above the 48, so we're still biased bullish. So I mean, a lot of it, obviously, if I could give you 100% answers that's always going to work, then I can just write a bot and retire and let it do all the trading for me. So there's no clear cut answers. It comes down to experience, but this will tell you when you're likely in a good spot. You're staying above the danger zone. So you're good. And what you could do is you could move your stops up. This is what I sometimes do is so I'm above the danger zone, and I would move my stop up to be at the trend dots. Now that's harder to do um, with options. That's easier to do if you play like futures. But as long as you're above the trend dots, the trend is still on. Like here we break below it. So you're like, is the trend still on? It's like, how much risk do you want to take? You could just say, okay, I'm gonna lock in my profits. I'm happy for the day. Um, or you could say, okay, I'm gonna lock in most of it. and I'm just gonna let it run because I mean it's so important that you learn how to hold runners because you're never gonna make outsized money if you don't play runners. So the simplest is get two contracts, maybe get one contract. If it pulls back a little bit, get another one, um, or get one and then a minute later another one. Obviously based on the technical move, don't add to your losers, but so you get it, you take profit on one of them at 10% or 15 or 20%, and then you keep the runner and move the stop down to minus 10, minus 15, minus 20, and just let it run until the technical trade is over. um, but yeah, I mean, it's important to practice runners and figuring out the best way to hold it. Did I answer some of your question at least?
Yeah, very good. Thanks.
What's your next question? While you think about it, so this morning, just before I forget, but so this morning, so we had a move, and I said, hey, we want before we play puts, we want to be above the pre-market high, and so the pre-market high and low are very important levels. So like I did a scalp here, and I got somewhere, I forgot where I got in, but I did got a scalp and I got out here before we got to pre-market high. But so all of this looked very bullish. VIX to the downside was on fire. This was up, and so all of this looked very bullish. And so, but this ended up being a perfect trap because we tapped pre-market high and then we dropped. So so if we cannot get above pre-market high and you see these levels, so this is the levels indicator, and there's a setting where you can say label them so you can see what they are, but you'll get to know the colors. But so for a safer move, you want to be able to go above the pre-market high, you want to come down and test it and then bounce off it, and then only then is it safer to play to the upside. I mean, we know that last week was a strong move to the upside, so we're overly long. So there's a lot of risk that we could have a sudden move to the downside, but a more healthy uh, price action today would be sideways consolidation. We have to process that big up move. We have to just take a breather. And so for a healthy day where we can expect more upside, we have to trade sideways today. If we trade more to the upside today, it's just more unhealthy. And last week was already unhealthy, so it's very risky to get into longs today because of the price action we had last week. So, and that's why you're gonna see a lot of chop today. Most likely, you're gonna see it go up and then go down again. So it's just not a safe day to trade. Now, if you want to scalp, that's fine, but you're building bad habits, of not waiting for those A plus setups. So my recommendation is spend the day learning the tools instead of over trading and possibly losing a lot of money. Exactly. With bad habits, no good. And when you sometimes get lucky with those bad habits, now they're even stronger, and then it's very hard to break them. And that's why a lot of people lose money, because they build these bad habits and they cannot get rid of them. Good questions, Andre. What's next?
I think these are the major questions I had. So I upgraded now on TradingView, the newest version, and it looks somehow much cleaner now. So it's much easier to visibly spot the things. So that's good.
Yeah, and then on the auctions level indicator, so if you look at it here, it has many more options, but at the bottom here, you want to check the simplified checkbox, because if you don't, it gets very busy. So I'm gonna uncheck it, and then you'll just see once it so now there's just a gazillion things, but there's other people using it for other things, but simplified.
On the auction level, you said that somewhere that we have to say that this will be used combined with the trend indicator.
Yes, you could do that too.
And what does that actually do if I click on that?
It just turns off a lot of things that you don't really need based on our strategy. Um, so you can either
Okay.
turn it off by hand or you can just single click and
Okay.
it takes care of it for you. But I mean, if you have time, you can go through each one of them and you can decide what you want, and then you can just say, save as default, and then you'll have that every time you want to do an update. But I mean, there's a lot of different things that work good for some people. So I mean, feel free to play with them. So I create these settings that and they change over time because I'm like, okay, this is not that useful. Okay, get rid of it, and then so that's just a quick way. If you want to use it the same with the same settings as I have, you just use a simplified setting, and then it's the same as what I'm looking at.
But I think the trend indicator works much more accurate, I find.
Yes, absolutely. Yeah, I mean it works. It works really well. I also share. So I have these settings. So in the morning, Vic will look at the Mancini. So Adam Mancini published levels for ES, which we find very good. So so Vic will go and paste those, and then I have an indicator where we translate it to like a string of numbers, and then he would put it in, and then you just open up the our Mancini indicator, paste it in there, and then it will draw the levels for you. So orange is pivot, so when we're above it, we're bullish. When we're below it, we're bearish, according to Mancini. Green is a strong support level. Red is a strong resistance level. When we break those, then the next target is the white levels. Then there could be multiples of those. So when he publishes those, I update my Mancini levels on here, and then I would save it. So if you use the link, the copy of this chart, and you refresh it, you'll automatically get those levels without having to take any action. If you use the Mancini levels with our indicator, you can also paste those into SPY or SPX, and it will translate those values for you automatically onto a SPY chart or an SPX chart, so that you don't have to do the math to adjust these levels.
Okay. And the two tools, there was one tool which called M2. So where can I find that?
Which tool is that?
I think if I'm not wrong, M2 or something like
Oh,
that.
so M2, it's this tool. So this is
Where can I find the access to that?
so that is so you go. I'll type it here into Discord while we record as well. So that is https m2.gatherworks.com. So that's the link. When you open that up, it's going to go to a page that looks like this. You're going to click on SPX, and then you're going to enable the audio alerts. When you enable it, it's going to make a sound immediately so that you can confirm that you can hear it. If you don't hear it, then obviously check your sound settings. I use this on my phone and iPad as well, and it works great. You have to keep the browser open and you have to keep the phone unlocked on iPhone to get the sound alerts. I don't know exactly how well it works on an Android. I know it will work. It's just like, do you have to keep the phone awake for the audio levels? I would think so. I'm not sure, but if someone tries it on Android, let me know what the requirements are to keep the audio alerts going. But I mean, so the idea is I am off doing some other work, and I would just turn on my
Maybe,
audio levels.
yeah, the tool is great, I think, for everyone. That's really good. Can you maybe say one more word on the the weighted volume weighted moving average. How you gonna use this one
Um,
on the VWAP?
so okay, so in the VWAP, so again, so we have, so the cloud is sideways, so I'm just, so the VWAP is here and there. So let me go back to Friday again. So this is the VWAP. So this is a standard VWAP. Okay. And so it's white. But if
Mm.
so if there's so if you're, I forgot exactly the math I used, but if, yeah, so if the Bollinger Bands are inside of the Keltner bands, then you know, then there is what, there is this super, I forgot there's a squeeze indicator that says if your Bollinger Bands retract within your Keltner channels, then it's consolidating for another, building up momentum for another move. So when that happens, I make it, dull, I make it gray. So this is saying that it's consolidating based on
Mm.
that math for another move to the upside. So
Uh,
when you see a side, a gray VWAP, then
mm.
you want to be careful to get into a move because it's still consolidating. I mean, it's
It's a
not.
bit, it's a bit,
Go ahead.
it's a bit difficult to see the colors. Maybe if you can you change this color somehow that it's more, that it's easier to see,
Yeah, I mean,
white and gray.
yeah, we could talk about that later, and we could see what things we could do to make
Uh,
it more useful. But yeah, I mean, keep a list of that, and then we can make
mm.
changes, and we can make it configurable, and do stuff like that. Other questions, guys? Good. I think we covered most of the things, so I'm gonna make this the new training material and remove some of the older stuff because a lot changed, over time, and I think we have, something that's quite different than some of the older documentation. So it's good to have a new recording. I will give Andre, a few days to play with it, and then we'll do another training session, and then answer these new questions.
Hey, Frick, one quick request. Could you add back the long and short signals? They add just confirmation. I know that they're not the best entries, but when you're going with the yellow arrow and you get that later on, it kind of just gives me a confirmation that
Yeah, I mean,
still moving in that direction.
I'll make it configurable. I think. Yeah, I'll put it back. I'll put it off by default so that you can put it on if you want it.
Yeah, we can choose to put it on if they want. If people don't want it, that's fine.
That's right. Is anyone else using the old calls and put signals, just so I get an idea of anyone using it? And that's
That would
okay.
be great. It would be great to show the 1 minute re-entries on the 2 minute chart, so that we have everything on one chart.
It would be nice, but you cannot do that with TradingView, unfortunately. So that's why I have the M2 tool. If you go to the M2 tool here, it will actually tell you. It will tell you that now is a good re-entry time based on that. So if you want to, so if you want to get audio alerts and you want to get those, use it. So this tool is something that's written completely separate of TradingView. It's so this is all my own code running on my own servers where you don't have those limitations that's introduced by TradingView. So on here, so if you want to know reentry, this is where you're going to be. This is a good, so exactly. But yeah, it would be nice if I could do everything in TradingView. But so this is the primary focus for me in terms of where we're going, because this is where we can do much more. But obviously combined with the actual TradingView charts so that you can, because I mean you're always going to need a human's experience in there to know when it's a good time to get involved. And like I said, right now we're moving sideways. The 48 is sideways, so you're just gonna see a bunch of chop. Now on a mean reversion day, what sometimes work is like you long at the bottom. So these bands are really good for mean reversion. Okay, and that's something we haven't talked about yet. But because I don't play that much anymore, but like when you're at the top of the band, you can short. When you get the bottom, you can long until you bounce between the top, the bottom, and the VWAP. So top VWAP, you lock in most of your profits. Here you take more, you long it, profits at the VWAP, down, VWAP, up, down. So that's mean reversion. Mean reversion says we're gonna, you know, because the VWAP is the mean, so we're gonna bounce between the bands and the VWAP. So like if you wanted to do any kind of trading on a sloppy day like today, you want to long at the bottom, take profit at the VWAP. Maybe if you want, hold a running to the top, but you don't get bearish at the bottom. You don't get bullish at the top. Okay, other questions? Okay, I appreciate your time. I'll be